And after a volatile Monday, it was a range-bound Tuesday for Indian markets. Major averages moved in a narrow band for the entire trading session ahead of the FNO expiry. After a flat start, Nifty ambled in and around 5100 for the entire day and then finally shut shop at 5120. The hallmark of today's market activity was strong volumes and strong market breadth. The oil and the gas index was the biggest gainer, courtesy Reliance Industries, and the oil and the gas index today appreciated by about 1.25%. It was a mixed day for consumer names. HUL and ITC they corrected, but smaller consumer names they did manage to outperform. Grasim was the biggest gainer on the Nifty, and Manappuram Finance was the top traded counter on both the exchanges. So what's the way forward for Indian markets, and how should traders position themselves ahead of this all-important June expiry? Let's discuss that and let's debate that with my two live market guests, Sandeep Wagle to talk technicals and to talk about market fundamentals, Nipun Mehta. Sandeep, Nipun, gentlemen, good evening. Thank you for joining us. Sandeep, after a crazy Monday, we saw a stable Tuesday.
It's very difficult, Nikunj, to make out whether it was a stable Tuesday or a crazy Tuesday. The way the markets panned out, it started with a fall, again it came back. Basically, we are moving in the range of 5080, 5090 on the downside to 5150. If you see the last 5 candles on the Nifty, they have been within a band, 3 green or maybe 4 green, 1 red, and we are going nowhere. That is the important point. I really don't think there is anything decisive you can bring out from this.
Nipun, a word on the current market environment. If I look at the environment is challenging. Macro is bad. Global undercurrents are slightly choppy, but markets are still holding on.
Yes, Nikunj, markets are still holding on, largely on the basis of expectations that you can see. You've seen, I think, clearly the positives that you can still see in this entire challenging environment that is all around is the fact that you've seen crude oil prices come down significantly over the last month or two. Not entirely getting reflected as far as the domestic markets are concerned because of the exchange rate adverse movement. The commodity prices globally coming down, that's something that again should benefit a lot of the manufacturing companies in India. So I think these two, beside the fact that there is constant expectation that there will be some policy announcement that could come by which could benefit the markets. I think really if you look around in terms of the factors for the challenging environment that is there globally as well as domestically, very limited positives that you can otherwise see. So it's great that the market is getting supported at these higher levels and remaining range bound at higher levels. If it can stabilize at these levels for some more time, I think that will be a good base that the market would have and good support levels that market would have created.
Sandeep Wagle, what do you make of the price action in consumer names? Large cap consumer names are now correcting. It started with Asian Paints a week ago, and today it was HUL and ITC.
Nikunj, HUL was something which we had a sell on today and we still have a sell on. I think it can correct. It's a trading move downside around 435, 438. So from a current level of 450, 452, I am looking at a 3 to 4% trading downside. Nothing beyond that. I mean, if you're holding it, I'm not sure whether one should sell delivery and play for that 3%. I don't see a move down to 410, 415. This is a small trading downside, that is all, and I don't want to read into it as a weakness in the market or weakness in HUL. No, I don't think so.
Okay, now time for our question of the day, and I'm sure this one is occupying everyone's mind if you're a trader. So the question we are asking on this edition of Markets Tomorrow on your screen: what will be or what could be the Nifty range till expiry? Sandeep Wagle, jump in and address the question of the day.
On the downside, Nikunj, 5050 will act as a very strong support. In fact, we had a glimpse of that today. It went to 5090, 95, somewhere around that, and bounced back. So, in fact, 5075 also is a safe bet, is what I would talk of. And on the upside, I don't think it will cross 5180. So 5050 to 5180, take a center point somewhere in between that, somewhere around 5120, 5125. I think that is where the Nifty will expire on Thursday.
Let's talk politics. Pranab Mukherjee is no longer India's finance minister. Do you think markets somewhere secretly are happy and they're happy to see he's back?
Nikunj, to a degree, I would think yes. I think there's been limited positive announcements that have come by in terms of all the challenges that one really saw as far as the domestic economy was concerned over the last few years now. The budget really has done very limited action in terms of the positives. There were changes that could have got created, whether it was infra spend or whether it was DTC or it was GST. So to a degree, I think, yes, the market would look at this move positively. What's key is really with what pace you can see a change and whether there can be any bills that are, the long list of bills that are pending which can get approved, which can get passed by the parliament and or any policy reforms that one can see during the month of July. I think that will be what's important and that could change market sentiment really.
Nipun, between crude and currency, clearly crude is having a bigger impact on Indian markets because even the rupee has plunged to a new low against the dollar, Indian markets are still holding on.
Yes, I think both have more or less negated themselves. If you look at it over the last 3 to 4 months, crude has come down by close to about 20% now. You're at close to about $92. You are at much significantly higher levels about 4 months back. I think the same has been the case as far as the currency is concerned. Clearly, I think the positive, when you saw positive movement coming out of some of the oil marketing companies or in the entire sector, it was based on the possibility that if yesterday RBI could do something positive and if that could get translated into a degree of appreciation as far as rupee is concerned, you really have crude oil on which you've gained, and that could get translated into the possibility of no diesel price hike that could just come about, and that could ensure that you have inflation even under greater control, that suppressed inflation that is there could get overcome really. But overall, I think, yes, even though currency is something that has more wide-ranging impact as far as Indian business is concerned,
right.
You're seeing the positive of lower crude oil prices having a greater impact.
Nipun, would you agree with my assessment that globally money managers are sitting tight ahead of the DU meeting?
Yes, I think that would be a fair assessment. I think very clearly there is risk aversion that is there. A lot of efforts have been made, whether it is in the form of QEs that have been announced or the LTROs that have been announced. You're really seeing a whole lot of that, which is close to about $6 to $7 trillion, which has now got funded into the system globally, and which has had relatively limited impact as far as the overall global growth is concerned. So it's essentially the case of a hole getting filled and still continuing to show a lack of growth as far as the global economy is concerned. So I think it's that's what we are likely to see till there are more concrete measures that are taken. There might not be any specific preference, whether for emerging markets or really for the or for any specific asset class, till there is more concrete news on the meeting or a lot of the developments that are expected over the next few days.
Sandeep Agle, let's address two, I wouldn't say mid-cap, I would actually say small-cap stocks. Manappuram Finance and Hindustan Motors. Pick and choose the stronger one for us.
Manappuram, Nikunj, is already moved. In fact, I remember this, we talked of it yesterday also, that has reached the target. So I'm not comfortable. Yesterday I was comfortable buying for a target of 30. But between the two, I would still choose Manappuram. I mean, I am still seeing some more upside to the tune of 32, 33. I'm not sure whether one could buy now. Hind Motors has already moved up 20% on a given day. I don't really think you should touch this kind of stocks.
Sandeep Agle, out of the Nifty 50, identify 2 or 3 names for us which, to your mind, are now finishing the downtrend.
I'm not clear, Nikunj. The market is choppy. Hero MotoCorp was a stock which we were bearish on till today morning, and we had a sell on it today. The way it moved up in the last half an hour is suggesting that there can be some more upside. So that would be one stock where I would say that we have gone wrong, and now possibly the bottom is done in that. Bank Nifty is another space where I would like to watch. Let it cross the high of today, then possibly we can look at some more upside to the tune of 100-150 points. But my view is that the Nifty or the markets are likely to be range bound at least for the next 2 days till the expiry. So no point reading into it too much, and we really cannot conclude that this is going to be a one-way move either up or down.
Let's look at two intraday graphs here, TCS and then Infosys. And TCS, it started flat, then stabilized, and then the stock closed almost at the highest point of the day, 1,235 rupees for TCS. Infosys Technology started up, cracked, and then closed almost at the lowest point of the day. Nipun, now enough and more has been discussed why Infosys in the near term is underperforming. But my question is that is the current underperformance by Infosys Technologies a good buying opportunity for a genuine long-term investor?
I think it, like you said, very clearly been discussed at length on this appearing to be a single company problem that is there rather than across the entire sector. I think the key is probably for Infosys not to address it from 2 points of view. One is very clearly to use the cash that's lying on the books and significantly large sums of that, how that they could leverage it to ensure that that growth targets that they've got over the next few quarters or and beyond is something that can that the cash can really contribute. The other is very clearly in terms of the various client accounts that are there and the various geographies that they were really catered to, how they can ensure in terms of their products and services to be sustaining the kind of order book that the other larger companies are in a position to do and Infosys really has missed out on. I think these two issues, if they are looked at more closely, you could see a turnaround as far as Infosys is concerned.
What do you make of the recent price action in some of the consumer names, Nipun? The fact that Asian Paints, HUL, Nestle, the performers are now suddenly underperforming. Is that a signal? Is that a harbinger that consumption stocks in the near term, they have topped out?
I don't think so, Nikunj. I think really when you look at a market situation where there is continued uncertainty and there is expected to be continued uncertainty for a few weeks or maybe months more, those kind of cases, probably all these FMCG companies that are there, despite being at relatively stretched valuations, will continue to find favor given the extent of growth, sustained growth that they have been showing, and the fact that the rural economy hasn't really got affected in terms of the extent of spending that they're doing in comparison to the urban economy within the country that we are seeing really.